welcome to Real Estate Investor Talk. My name is Neil Peterson, and with me today is Jaco Grobbelaar. He's a celebrated property investor, he is, and he's also a structure specialist and managing director of Prosperity Enterprises, and he's also authored a book called Prosperity Through Property. And we're here to discuss and find out from Jaco some real insights into property investing and his personal journey in property. Welcome to you, Jaco. It's always nice having you on the show.
Hi, Neil. Thank you for hosting me.
It's an absolute pleasure. So, Jaco, let's maybe just start off from your initial journey into property from sort of humble beginnings. Maybe you could share with us what sort of initially sparked your interest in particular in property investment.
Thanks, Neil. I've always been interested in property since school. Like many people, I read the book Rich Dad Poor Dad while I was, I think, in grade 8, and from that time, I knew that I wanted to invest in property. We actually released an article on our website how my first property made more than a year's salary. And it's on our YouTube channel as well, the story about that. And then that's actually the start, I took my first job where I got a paycheck big enough to get financing. I was 21 years old, and I bought my first property on an auction. And I bought that property for about 25% below market value. And I made equity available of about 200,000-300,000 Rand. And that was the start. Is we bought that property, we refinanced it, we made that capital available, and that capital then became the capital that I used to buy the next 3 properties. And before I looked again, I was sitting with 4 properties at a very young age. And when I actually sat back and thought about what just happened, because it all happened very quickly, I realized that one transaction, Neil, that was less than 2 weeks of work, made me more money than my entire year's salary that year. And that's when I knew property is something that I want to be investing in.
Wonderful. So maybe just tell us a little bit about, area, because, I mean, you originally from Bloemfontein. You relocated to Johannesburg, where you now actually reside. So maybe just tell us in terms of strategy, in terms of area, where did you start and what do you suggest people do? Is area important? Is it the area that you live in that's important? And more importantly, how did you go about it?
Area is definitely important. There's certain places in the country that definitely gives you better rental yield than other areas. And there's certain areas in the country that definitely gives you better capital growth. I mean, we can see this in South Africa. Johannesburg by far is the best city to invest in when you are going after yield or cash flow. And Cape Town is by far one of your best cities to invest in if you are going after capital appreciation. So there's definitely different areas that has different characteristics and different returns. However, when I sit with a client, I usually recommend for them to start where they live. And the reason for that is there's a lot to learn when you start investing in property. And to make it a little bit easier, starting where you live is not a bad idea. And that's actually what I did. My first property that I acquired was actually in Bloemfontein, where I lived at that stage. But my next properties I bought in Joburg because I was after that higher yield. And after I did my first transaction, I became comfortable with what it means to acquire a property, what it means to manage a property. I was a little bit more comfortable to invest in Johannesburg, even though at that point I was still living in Bloemfontein. But I also want to say that in any area, there are great deals. You just need to make sure that you buy the property at the right price and that you buy the right type of property that you can do something with that can generate good yield for you.
Wonderful. Now, part of your strategy, and it's a key component, and it's a very important component, is structuring yourself in companies and trusts and that kind of stuff, and making sure that your properties are protected and you know, that there's risk, it's free of risk and that kind of thing. Can you maybe just elaborate a little bit about that on in terms of your philosophy, in terms of structuring properties in a structure like a trust or a company?
Thanks, Neil. That's the foundation for me. If you want to build a skyscraper, you're not going to build it on a weak foundation. So if your intention is to invest in property, and especially if you want to own multiple properties, you got to get your structure right. I always tell my clients, you want to run your property portfolio like a business. And that means three things for me: own entity, own bank account, and financial statements. Meaning you are running this property separately from yourself, because when you do that, and when you do that correctly, there's four benefits that you benefit from. The first one is asset protection. If you structure your property portfolio correctly, you are protecting your assets. And when your assets are protected, it means that if something had to happen with you financially and you are in financial trouble, creditors won't necessarily be able to get to your assets. And that's what asset protection is about. The second one is estate planning. Do you know how expensive it is to die? So when you build a property portfolio, you want to build it in such a way that you can leave it to the next generation without a third of the value of your property portfolio going to government or going to SARS. And then thirdly is financing capability. Now, Neil, most people miss this when they think about structuring, and that is the fact that you can build a significantly bigger property portfolio and get financing for a bigger property portfolio if you don't build it in your own name, but you build it in something like a company. And then lastly is, of course, the tax benefits. I sit with a lot of people that are on a 45% tax bracket now. They own a lot of properties, and all the profit that they are making on those properties, they're paying 45% tax on. Whereas if you structure it correctly, for example, in a company, you only have 27% tax that you are paying. So from a tax perspective, there's a lot of benefits in the right structure. Now, the structure that we advise for our clients is to buy your properties in a company, but for a holdings trust to hold the shares in that company. And building your property portfolio in a structure like that offers or gives you all four of those benefits.
Wonderful. So let's talk a little bit more about risk management. What strategies do you employ to minimize vacancy rates, maximize occupancy across your investment properties, particularly like now when we have fluctuating markets or economic downturns? How do you handle that?
I think one of the best ways to manage risk is to educate yourself. Is you need to know what you are doing, and thus you need to invest in yourself and make sure that you become competent as a property investor. Is there opportunity in property investment? Absolutely. But you need to know what you are doing. So that's the starting point for me, is educate yourself, invest in yourself so that you know how to run a property portfolio. And then be proactive. If you see a property is going vacant in 2 months' time, start advertising the property and start doing viewings and start setting up appointments so that by the time that person moves out, you can already place the next tenant. One of the best ways to mitigate risk is with your purchase is make sure that you don't pay too much for a property. If you pay the right price for a property, you can always sell it again at a higher value and make your money back with some capital gains. So make sure when you acquire a property that you acquire it at the right price.
No, wonderful. So you mentioned the whole education thing and obviously continuous learning. I mean, those are definitely recurring themes, I think, for investors out there. So maybe you can tell us, what are the practical steps? Because I know that you actually host events, you host webinars and that kind of stuff that individuals can take to educate themselves about property investment, especially if they're just starting out.
Great. We've got a webinar that we host monthly on our website, prosperityenterprises.co.za. You can actually look at the webinars that we are hosting for the rest of the year, and you can register for those webinars. We actually do live seminars across South Africa. On our website, you can look at the events that we are having. We're literally all over the country where we teach people how to invest in property. And then people can book a one-on-one consultation with me. and sit with me, and we can actually go through your strategy. And those things are important things to do. I know, Neil, that you guys are providing a lot of resources as well to your to the audience, and I absolutely love the real estate investor events. There's such good speakers and such good information that is shared there as well.
Thank you very much. So I think also let's talk a little bit about challenges, because, you know, a lot of people say, you know, we hear about more problems than we hear about opportunities. And I just think it's the nature of individuals, you know, or the nature of the person. And, you know, can you maybe just talk about times where you actually face challenges? Because, you know, there's a lot of people that tend to be more challenged and they kind of get stuck in some times. So maybe, you know, in terms of lessons learned from yourself, what you learned from that experience, but more importantly, how you confronted those challenges. And maybe just share with the audience out there, because, you know, there's so many people that have got cash flow negative properties and they just made the wrong errors, and they thought they're going to make a lot of money and they haven't made a lot of money. So what is your advice for those kind of people?
Neil, I'm so glad you mentioned that with properties with negative cash flow, because I think that was my biggest challenge. So I was sitting with a big property portfolio that was generating negative cash flow. And we all know we had some interest rate hikes the last couple of years.
Yep.
And that affected me badly. And I had to go back to the drawing board and ask myself, what can I do with this property portfolio of mine? Because I'm sitting with a lot of negative cash flow. What can I do to improve this? And I realized that I'm going to have to do some things that's uncomfortable to me. I'm going to have to do some things that I'm not familiar with. I'm going to have to go into uncharted territory if I want to improve my cash flow. I always tell my clients there's 4 ways in which you can get your properties to generate positive cash flow. And that is number one is short-term rentals or Airbnb. Number 2 is student accommodation or room rentals. Number 3 is multi-lets, where you've got multiple tenants on one property. And number 4 is low-cost housing, where you go into the affordable sector and you buy these building blocks where you can generate good cash flow. So those are your 4 main ways that you can generate positive cash flow. But what I didn't realize is you can even turn your negative cash flow properties into positive cash flow properties by turning it into, for example, student accommodation or turning it into Airbnb. Now, I do a lot of student accommodation now, and that was something that I was very uncomfortable with. I never thought as a property investor, I'm going to be in the student accommodation space, but circumstances forced me to go into this uncharted territory. And suddenly I realized that there's a lot of opportunity in this. And by turning and converting our properties from normal long-term rentals to student accommodation, suddenly we drastically improved the cash flow of the properties. And even though it's not your traditional student house, it still worked. And I realized that sometimes you're going to have to do the things that's uncomfortable. One of my colleagues had a big property portfolio that he turned into short-term rentals, and he used to rent the properties out long-term, and then he started Airbnb the properties out, and by doing that, he improved his cash flow, and he actually addressed the challenge. So there is hope. There is hope, even if you are staying with properties that are generating negative cash flow. But it may require you to go into uncharted territories. And that means you're going to have to go educate yourself again. And that's something I realized. I've been in property now for 15 years. I live, breathe, eat, sleep property now. But when I changed my strategy, I realized I need to, from the start, realize again that this is a new strategy which is going to require new knowledge, new education, and I had to prepare myself for this new strategy that we take on. Another thing that I did, and I don't recommend it to everyone, but I'm certainly glad that I did it, was I took the management of the properties back in-house. Now, that was a big step for me because I had a relatively big property portfolio, and it requires a lot of work to manage the units yourself. But by doing that, we could improve the cash flow significantly of the properties because of the change in strategy as well. So we did the uncomfortable things. Never did I think I'm going to manage my own property portfolio, but circumstances required me to do that. And it's one of the best decisions I could have made. So those are things that you need to keep in mind when you're looking at your property portfolio and the challenges that you are facing.
Wonderful. Great. Nice way of putting it. So just maybe just on a more general perspective, just looking at the outlook of, sort of the markets, what evolving marketing dynamics. Now you mentioned 4 categories, obviously, which, and I'm glad you did, because, the market has changed so significantly from the standard buy-to-let properties over the years. But, what evolving market dynamics, emerging trends do you foresee impacting, residential strategies going forward?
I want to go back to people that are sitting with negative cash flow properties. Your saving grace with a property that is not cash flow positive is obviously capital appreciation. Now, capital appreciation has not been great since 2010. So for the last 14 years, we've seen very poor capital appreciation, especially in Gauteng. I just bought a property for less than what I paid 10 years ago for a property in the same complex. That puts into perspective how little property has grown over the last 10 years in Gauteng. Western Cape is a little bit of a different story. We've seen a little bit better capital appreciation there, but also not phenomenal growth. But I'm cautiously optimistic that might change going forward. Looking at the economic outlook, I think we are sitting in a great place in South Africa. I'm cautiously optimistic about the government of national unity. I think that accountability and politicians working together is going to be great for the economy, and that means it's going to be great for property investment as well. So I do foresee better capital appreciation in the next 15 years. I definitely see better capital appreciation in the next 15 years than the previous 15 years, which is going to be very positive for property investors. But as I said as well, you need to be able to make money irrespective of what the economy does. And that's something I had to learn the hard way, is that I'm not going to build a property portfolio that's dependent on a good economy. I'm going to build a good business and a good property portfolio irrespective of what happens in the economy.
Wonderful. So I just got 2 more questions. The one is related more to prop tech and using tech and software as a property investor. And I know tonight you mentioned you've got a webinar, got lots of people coming in. You're actually doing a whole big event on that. But maybe you can share some of the sort of what kind of software, how can software and how can prop tech assist property investors? And maybe you can share to some of, a couple that, resources that investors could use to improve themselves as a property investor.
I cannot imagine building a property portfolio and running a property portfolio without software. I cringe when I hear these people that still manage their tenants on Excel spreadsheets. There's such phenomenal software available for property management, for example. Yet they choose not to educate themselves in those products. Neil, you will remember the time when we were looking for properties in newspapers. I remember as a boy when I started getting interested in investing in property, is I would wait for my father to buy the newspaper, because then I can go through the classifieds and look at what properties are for sale. How times have changed. I mean, today we sit with private property and Property 24, where you can find any property that you can imagine with a click of a button. And the great thing about those softwares or those platforms are that you can put on filters. So I invest in a very specific niche area, and I put filters on these platforms where I get emailed or notified immediately when a property is listed in the area, at the price range, given the type of property that I'm looking for, and I can immediately act on that and submit an offer to purchase. Then there's the deeds office and the software that's linked to the deeds offices like Lightstone and Windeed. I mean, I cannot imagine today buying a property without looking at a wind deed or a Lightstone report and seeing what the property, who the owners of the property are, how much they paid for the property, what's the bond registered on the property, what did similar properties sell for. I mean, that information is key. To have that information available enables you to make so much better decisions when it comes to acquiring property. And then I spoke about property management. I mean, can you imagine running a portfolio of properties without having proper software? I'm talking about software like PayProp and TPN, rent books, where you can actually manage your property portfolio, your tenants, and do billing and reconciliation and all of that. So that's great. That's great software. And then there's, of course, investment software. We've built our own investment software for our clients as well, Prosperity Online, where you can do run analytics, where you can look at investment properties, where you can work out what the gross rental yield and the net rental yield and your internal rate of return and all of those things are. And that's also great software, investment software to have, to analyze deals and to analyze your existing property portfolio to see how your property portfolio is performing.
Wonderful. Great. Thanks for that great insight there, Jaco. So Jaco, finally, you've written a book, Prosperity Through Property. Tell us a little bit about the book. I know you've sold quite a number of the books. Maybe to share some of the stories within the book.
Great. Prosperity Through Property is my journey over the last 15 years of investing in property. And with sitting on people on a daily basis, helping them in their journey as a property investor, I realized that there's a big need for content, especially South African content. Yes, there's a lot of nice books available internationally, but the South African market looks a bit different. And the strategies and approaches that we apply in South Africa looks a bit different than in the rest of the world. And Prosperity Through Property covers everything from the property market in South Africa to how you find an investment property, to the numbers that you use and the analytics that you use to determine if a property is a good investment, to the structuring and what structuring you should have in place, and all the way to property management and how you should manage your property portfolio, and the key golden nuggets of building a property portfolio or building a property empire and creating wealth or prosperity through property.
Wonderful. Jaco Grobbelaar, founder and managing director of Prosperity Enterprise. It's wonderful chatting again to you today. Always great to get your insights, and love your energy, love your passion for the property game, and certainly I think you can bring a lot of value to many investors. Great chatting you as always. And this is Neil Peterson signing out from Investor Talk. Thank you.